Welcome back to Just Make Money. It's a platform where you get a very refined and a professional outlook about a particular market, a market of your choice. You do not have to analyze or dig deep into data to know what the future holds for that particular market. Or even if you do, or even if you analyze the market yourself, you can take our views as an alternative for vetting your opinion or opinion of somebody else. So, in either case, all you have to do is to just listen to us and listen to us on a regular basis. This new video has come up after a period of time. We were waiting for some of the global events to take place, take shape, so that we can give you a proper analysis of what the market holds for currency market this time around. So just sit tight, relax, and listen to us and just make money. I, Sumit Kumar, have an experience of more than 25 years in international and domestic financial markets, and I'm your contact person, and I'm advisor to HNIs, NRIs, and corporates for their various needs like hedging, investing, and trading. So let's start with dollar index itself, what it had been, and what it looks like in future, near future at least, for a week or 10 days time, because that's what we are time that's what we our time horizon is, and that's what we plan to analyze for. Now, if you can recall, this was the very beginning of the video that we were providing to you when the dollar index was heading towards 114, 115. We had suggested that it would correct and pull back again from say 110 or 108. Then in the next price chart, you'll find that this has actually corrected from the levels of 110, and it had again gone to 113, but it was finding it very difficult to push ahead of 114 levels. So it remained under 113 for a quite period of time. There was a lot of selling pressure in US dollar, and we will see in our next price chart that it has actually come down. US dollar NR has US dollar index has actually come down, and it was till yesterday it was rolling around 110 or something. So it has broken a support level of 111.50. Now, what is next which holds for dollar index? Our take is that dollar index should consolidate to correct. It should not be moving up anymore. Anymore means for some time. I'm not saying a US dollar index is down. US dollar is not down. It is just resting now. It is correcting a bit. It is likely to pull down a bit. It is not down, please mind it. But still, while it is resting, it is just trying to pull back. It is tired a bit. It can come down to three levels that we had given to you. One was 111 or something, which it had broken. Now another is 108, and then 106. The most likely zone for US dollar will be 108, which you can see from the support line and the arrow indicating 108 level. That would be the most likely zone for US dollar where it will find support, major support on closing basis. It may touch around 106, 105, but it will pull back from there, and it will pull back very sharply to close above 108. So this is our analysis of how it looks like. This was a technical perspective. Fundamentally, in the short term, what has happened is that a lot of central bankers throughout the world, they are actually pointing towards a rapid rise in interest rates globally, especially in the US, which is hurting them all over. And if I can name a particular country which is really being hurt badly, that is England. And so authorities like I would say finance ministries and the central banks in the US, they are taking note of it, that it is hurting globally, and instead of controlling inflation in a very fast manner, the pace of rise in interest rate may cause a financial crisis. So that is what there is in their mind, and that is what they want to avoid. They want to avoid a financial crisis. Inflation cannot be controlled, and it should not result in a financial crisis. There should be a steady growth also. There can be a slowdown in the economic growth, but it should not, the economy should not die. So that is the fundamental shift because of which the dollar is correcting somewhat. It is not down, mind you. Now let's see how other currencies are behaving, and our point of concern should be Indian currency vis-a-vis various international currencies. So let's start with the US dollar INR. This was the previous price chart which I had shown to you, where it had broken out very convincingly out of the 80 zone, and that is where the RBI had taken its hands off US dollar INR. They knew that the pressure of selling is too high, and it will not be good. It will be self destructing, because they could be putting in a lot of dollars to contain the rupee. So they did not want to do it. They wanted to market to decide the levels. So this was the level of 80 when the market had breached in the month of September, and it had gone to 81. Immediately it went to 81. Now this is again a previous price chart that I had shown to you, that from 81, it had earlier high of 81, it had reached a new high of 82. In my previous video, I had given a suggestion that by around mid of October 2022, USD NR will be touching around 83, which it actually did. Now this is a compressed price chart, daily price chart. We can see that how the currency has actually moved, how the currency had breached all the resistances. There had been a tremendous selling of US dollar in India. A lot of money was pulled out of India, because of which the currency has depreciated to the historical levels of 83. It has actually breached the levels of 83. Now what? Now what should we expect out of this? Again, we have to take the cues from US dollar. US dollar is going to correct a bit. It's going to rest. It is tired. That means other currencies are going to get stronger. Rupee will get stronger. That is the fundamental reason. Now the technical sees that rupee versus US dollar is also tired now, and you can see it pulling down. From 83 it has come down to 82 yesterday levels. I'm not talking of today morning, I'm talking of yesterday night, what it had happened. So you will find rupee also pulling back to the levels of 81, around 81 by this month or next. So now what should be done? Those who are exporters, they should be hedging using forwards or futures. Options should not be used, because that will be a costly proposition. No more for short term, I'm talking about say a month or two. Those who want to hedge, they should use futures and forward to hedge their positions. Now exporters should be hedging like that. Importers should be hedging using options. They should not be buying dollar right now, because there is a high probability that it should come down to the levels of 81. That is where they should buy it. Investors in dollar should be out. They should book their profits for short term. People should be bullish on rupee and less bullish on dollar. That is how the outlook should be for, say, at least a week or 10 days time. Now let's move to other currency, which is Euro INR. It is the second most traded currency as far as Indian exporters and importers are concerned, or traders are concerned. Now, this is a previous price chart where it had moved in the range of, say, 77 to 81, 82. I'm giving you a roundabout figure where it could be 81.50, not 82. So it has remained in that range for quite some time. This is a previous price chart. Now the current one shows that it had tried to breach 82, but it has not. There is a stiff resistance over there, and it has not breached 82. This could be somewhat sort of a trend reversal for euro if it goes above 82. There is still a possibility that euro can come and rest in the range of, say, around 80, 80, 82, 80, 82. It can rest in that range for some time. But if it breaches 82.50, then you can assume that there can be some upside for euro for some time to come. So now the fundamental reason for it is very obviously that dollar is resting, dollar is correcting a bit. The technical reason I have shown to you over here, that it is very close to the resistance level, a channel. It is attempting to break a channel, and if the channel is broken, then you can expect that it can go around, say, 85. Very easily it can go around 85 once 82 is broken, but it will take some time if it does. Most likely it's going to happen around, say, the first week of November. If it happens like that, that will be a confirmed kind of a move if it does that way. Right now it is shaky. Now what should be done? All the exporters should hedge their positions, hedge their bets using forward or futures. Right now I will not suggest any traders or investors to put their money in euro. You should wait for some time, because it is very volatile and it may take some money out of your pocket. Now let's go to pound sterling. Pound sterling had a very volatile ride, and it this currency was more fundamentally affected than any other. We have seen that it had gone to around under 85 versus INR after breaching 88. Now, because of some fundamental shift and restoration of some sort of confidence in the market, it has again moved back in the channel of 88 to 85. Now this price chart is a previous price chart. I'll give you the current one. Now this is the current one, which is quite similar to what we have seen in euro INR. It has tried to breach 95 versus rupee, pound versus rupee, GBP INR. It has tried to breach 95. The reason is very clear. Dollar is correcting a bit, so all other currencies are trying to move up. And again, the reason for pound to move up so sharply, that is because of the new government, that is the Rishi Sunak government, because of which there is some sort of confidence that he is going to restore some kind of a stability in the monetary and fiscal measures. So again, there is a possibility then this channel of 95 to, say, 88, or say 90 to 95 channel can be broken. Now if this channel is broken for the upside, there needs to be a fundamental shift, a correction in dollar first of all, or some kind of fiscal or monetary measures in UK which will pull this up. Now that is the fundamental reason. Technical reason I have shown to you, that there is a channel and it's rolling very close to the upper side of the channel. Now what should be done? Exporters should hedge using forwards and futures. Don't use options as of now. Options are very illiquid in India also. GBP INR I'm talking about. Importers should wait. Importers should wait who have exposure in GBP INR. Traders should not put their money in GBP either. And wherever there is a profit, it should be booked immediately. So this was my take about various currencies versus INR, and the major outlook for the week or the period of say a week or 10 days is that dollar is going to correct a bit, other currencies will rise, and those who are getting benefited should hedge or book the profits. So that is about this. That is about this week. Now, if you find my video presentation to be of some use to you, then please like it. Please share it with people who have the similar kind of interest in the currencies, and subscribe it so that when we have the next video it comes to you automatically. And also comment if you want something more, or if you want something where it becomes more informative to you or to others. I'll be back again. Thank you.